We'll let some people filter in, so I won't get too deep into anything, but hopefully everyone's good. For anyone that doesn't know, this is True Crypto 28, Mr. Anderson on Twitter. Just gonna do a little bit of a market update. Pretty basic stuff. First and foremost, I mean, one thing I would like to kind of point out is that nothing happened that was out of the ordinary. I plan for different things, right? Say, hey, what if X happens? What if Y happens? What if something surprising happens? What if we do a busted triangle? What if we do a double busted triangle? We just didn't see any of it, right? I mean, this price action was so straightforward. I'll just give you an example. I mean, first and foremost, descending triangles. Now, it is true, despite the argument, 63% of the time when there's a bull lead-in, a descending triangle will break up. Still means that nearly 40% it breaks down. But ultimately, in this situation, we don't want to forget that descending triangles are simply bearish by nature. You're having lower highs, right? This is very basic stuff. We always had this bear channel in effect, and it remains in place, right? So something that you could have drew out as of July 19th, the structure would still be there. But as far as things like trend following, and for anyone that's in the groups, it's very basic stuff. Like this is Golden Child, right? So Golden Child on a daily scale, and obviously had the bull lead in, so this was all very bullish. But then we went into what, short on a daily scale, long on a daily scale, chop, short, long, and then a series of shorts before dump out, right? If you go to weekly scale for the same indicator, Golden Child, short before the big mega dump at 6,000, long from the bottom, short at the top, short before the dump. And this is all the same part of this short, which obviously a lot of you guys know and pointed out, etc. But just go over a few examples and I'll kind of explain why I would show this to you guys. This is something called God's Eye. It looks specifically at momentum, right? And even momentum into a single candle. And at scale, that can now play out to lead to trend, which is the idea. So on a weekly scale, obviously you see something like long all the way to the 20,000 high, short thereafter on a weekly scale. This is a bear market bull signal. Short again, bull bear market bull signal. Dump out again, short to the bottom. Bull from the bottom up, right? Short here again. So very, very, very what? Cookie cutter type stuff, trend following, normal behavior. This is Neo, right? Okay, so this is Neo. Neo is one, a counter trend finder, right? So you'll get some counter trend signals that are in capital letters. You'll get some pure trend, which is great at the pure trend, the very basic trend finder. So start with the 4 hour, right? You get a short signal. It was actually short even before that, but you have that head fake. This was back into the 10-2. We've always said 10-2 or below is dump susceptible. Once we lost that, we lived under there. You came back for the fake out, right? This was that last bit of a fake out, and then continue to see trending short, trending short, trending short. Look at the lower time frames, and at the same time, you were getting the assurance from the lower time frame. Trending short, trending short, trending short, all the way to the bottom. It wasn't until down here that you started to see counter trend type longs only, right? Counter trend long. And then to get the actual bottom type moves, you had to be on a very low time frame. Lower the better. Obviously, this would be a counter trend move on going from 7,800 up. And then more recently, this is actually a counter trend because now the 30-minute was trending bullishly, but counter trend on the 30-minute down. But what's the point? The point of all this is, and hey, cool, look how great the indicator is. It's not about that. It's that if this can be put on an indicator, right, which there's no indicator that is just push button, always make money. It doesn't work that way, right? You want to be able to read it and understand the market, etc., and then formulate that with a trading plan. Then yes, you can utilize it to make money in leaps and bounds. But the idea is that if the indicator is able to nail it all the way through, then it's pretty simple price action, right? There's not anything dramatic happening. It's just showing that there's imbalances occurring, and that even that can obviously be identified then by the indicator. I mean, this is the day trading indicator. Everyone can have this on YouTube. It's available, right? So you look at the dump out area right here. So if you could see on the left side, you'll see the same line, which is coming up right there. And it's just showing you the same point in time. So instead of showing you all this area, by the way, back here, it was just nailing shorts nonstop. But right here, as of this point, This is a short. You see the red, so this is a short signal. It took you from 9,700 down to 93 and change. Yes, there was a nice bounce at that range. Probably took some of your profits, but it was still profitable even if you got out at the worst spot. And then again, gave you the other short right here. 9,400, had plenty of time to enter it, by the way, and that 9,400 literally took you down to the low 8,000s. If you let it bounce all the way back up there, that's your fault for giving your money away. But the idea is that every single one of them just basically had the ability to nail it. So what's that mean? It's just there hasn't been any surprises. That's all. So there's no magic to it. It's just basically the way it's been. So what I don't want to do, one of the first things I want to make sure I don't do is that yes, we have obviously a downtrend, and bear channel shows that more distinctly now, right? We had one formation that looked obviously it looked like a descending for a long time. We saw symmetrical triangles within the descending. That was all very real. But now, look, patterns morph, and this looks much more obviously like typical bear channel, right? Which leaves us obviously downside to the bottom end of the channel, so that can certainly come up. But there's a lot going on here, so I'll get into some of it. I don't want to make sweeping observations, right? So let me clear out all of this. We can sort of redraw it. And what do I mean by that? I'll kind of explain that to you. You know, what's a sweeping observation? A sweeping observation would be like, hey, look at this. I'm going to give you some examples here. Let me just bring some moving averages up. Hey, we're bouncing on the 377. We're going to hold there, right? That would be a sweeping observation. Or, hey, look at all this support. We're definitely going to hold there. That would be a sweeping observation. You can go the other way around it. We're way below the 200. We're certainly going to dump down to these levels, the 610 EMA. This is the yearly TWAP, right? Time weighted average price, which I'll explain a little bit about in a minute, which is very intriguing to me. But instead of sweeping observations, I want to be open-minded, and I'll explain more of that later as well. But the idea is that if you stay open-minded, you're going to have some opportunities for long, some opportunities for shorts. If your trading skill is not, up to par, don't try to go long, short. That's probably a mistake. You should basically try to jump with the trend when it makes sense. So we'll get into that in a minute. I'll kind of explain that. Of course, everything you're going to do is your own decision, right? It's not financial advice, obviously. I'm telling you things that I would do and how I basically observe it. You got to obviously take care of your own money and make sure you're doing the right thing. If you're jumping on a video with me and after 5 minutes making a decision based on something I said, then you're playing roulette anyway. Other than that, what I rather focus on then is what do we know, right? So instead of saying, look, sweeping observation about this 377, and there's more, by the way. There's some intriguing things. I'll show you the weekly. This is the 55 week, right? So that's pretty interesting. I'll talk about this for a minute. We know this. The trend at the moment is down. That's for sure. That's where we're at. The trend is down. Does that mean you can't have great counter trend opportunities? Does that mean low likelihood, but does that mean you can absolutely reverse course? Yeah, you can do all those things, right? And we'll talk about some of that as well. But at the moment, we know the trend is down. We also know that there is a very interesting level here, right? Why? Well, 55 week that we stopped at. I'll flash back. You know what I'm going to do actually? And we'll mark that off right there, just like that. So that's the 55 week. I'll go back to a daily for the majority of this, which is to say, obviously, crypto, there's a lot of math that you can utilize that makes these pretty similar. So because it's a 24-hour market, so you have more likelihood to be able to do this. But in this case, the 377 typically is going to line up with the 55 week anyway, but it's right there. You stopped. A little bit of a double bottom type formation. To call it a double bottom now would be a little bit silly. You're dealing with a range. I'll speak about that in a little bit again. But the idea is that the trend's down. We focus on that, and then we look at the areas to see what's interesting. Well, we know the 55 weeks interesting. We know the 377 is interesting. I'm interested in this time weighted average price, which I'll explain in a moment. This is the big 610, right? It doesn't come into play too often, but just from history, if we take a look, 610, 610, 610, 610, it also lines up with the 89 week moving average, which has historically meant something to Bitcoin for sure. And I'm going to show you a couple different things. First and foremost, go back to auto for a little bit. We had this linear trend line, which really did a lot of good things. Let's put this on array. We said, hey, this is something that's interesting, it's intriguing, will it hold, etc. And we focused on that. Excuse me, am I on? I'm not on linear, sorry. I knew something was wrong. So we focused on that for a little while. Here. Okay, so these were takeoff points. I'll take these moving averages off for a moment because it's distracting. And you have a takeoff point, another takeoff point, linear trend line, bounce. Now, what happens? You peel right back into that. When you peel back like that, that's bear market type behavior anyway, so you never want to revisit it. But before that happened, this wasn't so bad. You had a chance to build something, but then it started to just really reverse. You had the fake out right there, right? This is that dump. Okay, we broke our line. Good. Came back for it. We said under 10.2 is always dump susceptible anyway. So the combination of one, losing 10.2, losing the trend line on close, this thing dumped out. I mean, that couldn't have worked out any better from that perspective. Now this thing dumped hard, right? So going back into this range when we were talking about it, I can tell you guys that I expected that the 21 week would get a bounce, which is more in line with here, but we also started to see something where the 21 week at this time was down here, right? And it started to advance pretty quickly because time was just going by. It just spent 3 months in this particular pattern, held up, and the 21 week gained and gained and gained. And what ended up happening is we started to see the 128s get a little bit of a front run on that. The 128s in themselves, in my opinion, is absolutely a front run of the 21 weeks. I think that's a collection of people that say, hey, I want to front run and get in front of the 21 week to begin with. So when that started to fall, you've seen it get a test. Sort of, you almost got there, a little bit of a tweezer, bounced hard, then come all the way back, another bounce, and then peel back again. No good, right? So once they went, it was already in free fall at that point, but the 21 week wasn't going to hold in that situation because that fight had already been lost for the most part, right? Especially how hard it dumped out. So it is what it is. That's where we're at. But again, nothing that doesn't vibe with normal price action and what the trending action. Obviously, again, if all the indicators can nail these moves, then certainly it wasn't anything dramatic happening. The indicator is not sophisticated enough to play games and understand that head fakes and things of that nature. It might identify that, hey, the head fake came up short and give you a short signal there, but it's really just being more specific with following the rules that were set in the algorithm itself. Now, besides that, basically what I was explaining is that, so we got the combination of some interesting things here as the 55 week and the 377 line up. Okay. What we do know, though, is that these 200s, right? So let's put the 200s up in pairs. Basically, you have a situation where you lost those on spot. Now, futures is very different. I'll talk about that in a minute. But basically, you want to see, can they reclaim one or the other? This is the simple moving average. Well, it looks like it's possibly rejecting here, so that would be ugly. And we'll go to the lower time frames in a little while. And then, of course, this is the EMA, which, in my opinion, is a little bit more important, right? The EMA lost it, rejected it, dumped out again. So you need them both, basically. That's why I always look at them in pairs. But the idea is that you're in a situation to where there's a pretty good battle already occurring, and that could be problematic. So what do we have now? I did bring up that trend line, so I don't want to forget why I did that, because once we lost the linear, look, it's not over for these particular trend lines, and I'm not the biggest trendline guy. I really am not at all, but I do understand that there's a level of geometry that seems to vibe with crypto and Bitcoin and always has. So I do keep an eye on them. Never am I looking at it and saying, hey, this is the line in the sand. This is going to mean everything, because it doesn't. But, I will show you a couple things that are just a little bit interesting, basically. So, we have the possibility of a parabolic trend line here. You have, why? Because you get a something that starts at one point, bases into another, and you have a takeoff point, and then you have it from your takeoff to the next takeoff. You can draw in another one, and then if you want to draw that differently, I don't have a problem with how someone draws it. So we might be there, right? If you like to draw it in that manner, that's understandable. So we might be testing it, or if I draw it a little bit different, that's the problem with these long trend lines, right? The difference between the two is fairly dramatic. But if I draw it this way, it doesn't have to be perfect. This one seems to be a little bit more in line with going from like a low to a low. Then what does that line up with? This time weighted average price. Basically, this is on a yearly scale. If you guys don't know what that is, all it does essentially is that you're looking at the price of any asset, and you're taking the average price of each particular year. So why is it interesting? Because in some ways, if you're thinking, you might say, well, I'm going to only put that up at the moment. You might think, well, of course it's going to touch the average price, right? Because it starts each year over. I'll show you what I mean first. So you start here. So day one, the average price is whatever that close was. Day two, you take the 2 days, you make the average of it. After 5 days, you take the 5 average closes, you take the average, etc. So that's how you're getting this line. And then that restarts at the beginning of the year. So now it takes day one's price again and restart. So the data from the previous year basically doesn't matter. But the thing that's interesting about Bitcoin is this, because it tends to move fast, right? You start to see big moves, powerful moves. What we notice in this is going back, I'm not going to go to the beginning of the time, but price was basically close enough to where it certainly occurred. But you're close enough here starting from 2012. Okay, obviously in the beginning of the year you're going to touch. But what you end up seeing, and I'm not going to do this all the way through, but you end up seeing some situations where price leaps away, right? 30, 40% type of leaps. And then even when you get that 30+% type move, you get a revisit a few months later to this particular level. All right, well, that happened in 2012. Well, let's go forward in time. What about 2013? Let's see if it could happen again. See if we can get ourselves a interesting, right? So here you go. You get what? You get a nearly 2,000% move. 1,800% or so. Yet this thing comes back and touches that time weighted average price, right? Okay, well, yeah, still interesting to me, right? And by the way, I got to give credit. This is something that I got from the Adaptive guys, right? From Murad and them, which just interesting stuff. So I find it intriguing as well. So it's not like I discovered this at all. Okay. In fact, something like the VWAP on the quarterly basis. The VWAP, I think, was around 7,500 going back a few weeks ago. And I hadn't been paying attention to that as well. And when I came across that, I was like, okay, it's looking a little shaky for sure. So what do we get in 2014? I'll try to skim through this. Like I said, I'm not going to do it all. Over 50% comes back, touches it again. Okay, so the whole point I'm making is what there makes a big move, bull or bear. We're seeing a retouch, basically, right? So then we look and you had some traversing type of action. Obviously, we know 2015 was a very strange year and a sideways year, but it didn't change anything in regard of this. You had this one was only 25%, then it came back, eventually. And then you eventually had, let me find where I was at, this guy. Even this one was over 30%, and again, it had yet another touch. So you got the sizable moves that we're talking about, over 30% or so, and then another retouch to the average price within the year. So resets, I might as well just do them all just so you see I'm not making this stuff up. You end up getting this jump again now, what, 88%? So you made an 88% jump. Well, guess what? We're going to come back and touch again. And then even in 2017, now 2017, we know how hyper parabolic that was. And this one is a little bit, you could kind of say, well, I don't know if this one counts, but technically we're going into that 30-40% type of range. We did get an early move. It did retouch, so you would think that would qualify a couple touches. But then even from there, you still got the bigger move, which was 45% within that year. It's just that this is so hyper parabolic that it's hard to tell. It still came back for that retouch yet again. So why do I bring all that up? By the way, 2018, a huge dump out. We know how this occurred, right? So price ran away from it yet again. 60-something% dump, came all the way back and literally for multiple touches during the bear market. So why bring that up? Well, here we are, we're in this situation, and basically, again, now this could qualify. I understand this, that you came here, you had a touch, right? And you did see, well, you didn't quite get there, right? So I was looking at 30% or more. It got about 25, 28 in that range. And then it did come back for a little touch here the first week of March, and then obviously went crazy. The question I have is, man, do we have to see a touch again here, right? I don't know if we do or don't, but it's interesting, right? So it does intrigue me. So we have that level here. That was a very long way to explain that we have this level right here that likes to be touched intra-year. And we have that lining up with this possible parabolic trend line. And it's not possible. I mean, it is a parabolic trend line. If I can erase some of these, I can show you something real quick again. I don't want to go too far on a tangent again, but if we just look in the past and some of these trend lines, they may mean nothing. Maybe they're just interesting. Maybe a lot of it is like form-fitting type of stuff, which is understandable because certainly the way we draw it, it can seem that way. So I'm going to just kind of draw these in from the previous market so you can kind of see what I'm talking about. Let's see. You go in with one of the, what am I doing? Point to, excuse me, base to base. Forgive me. I don't have to do the first one. Okay. That was wrong. I'm doing this at a distance. The screen that I'm looking at might literally be halfway across the room. Anyway, you guys get the point here. There it is. That one to that one. Okay. Tip to tip. Good. And then we have this one. So that holds many times. You get many touches, then you end up going. Let's see. You just end up with a bunch of interesting lines, right? Again, I'm not going to look at this and make trading decisions off of it, so to speak. But if you get close up, I mean, some of these are pretty obvious. You got to be careful with this type of stuff because you can easily draw them too fast and get yourself in trouble. But eventually you break the parabolic trend. It's not that they bounce off, but you end up seeing bouncing off one zone, rejecting another, holding a little bit, bouncing off another zone, topping out on the other, hold, finally flush through. You have your bear market, come all the way through to this break. Happens to be an interesting line here. I mean, it's kind of interesting stuff more than anything. Like, man, it's kind of intriguing how these things line up. How much they mean, I don't know. You could form fit it and make your own decision on it, of course, and say it means everything, or maybe it means absolutely nothing, which is fair. But I'm still going to keep an eye on it, which is the idea. So there's some confluence there, not to mention the fact that that also mashes with what? The 610 that we discussed, right? So that's the 610. That's the 89 week. Why do I care about the 89 week, or why should you? This is a 610 EMA. It was also the 89 week a year ago when I made a video like this, which is still on YouTube here. I think it was around this date. We said, hey, you know what? This is a key level here. Once this 89 week falls, everything falls. And sure enough, the day it fell, that's the day that we started this descent. So why bring up all of this interesting stuff about support? Because we just have to be aware of it more than anything else, but no sweeping observation. It doesn't mean, hey, we have to stop here, we have to stop here, but it does say to us, hey, you know what? I got to tell you, you have a lot of space in between these particular levels. So maybe it better stop here might be a better way to look at it, right? But it certainly doesn't have to stop there at all, especially when we just started the move, right? So now, was this a giant move? Yeah, it's a pretty damn big move that happened pretty quickly. But you start to look past this line, and why it's interesting to me, if I go back to a weekly scale, is you're going to see that basically you start getting into, okay, so you have some scenarios where I already pointed out these 89 week. That's the 89 week right there, which bodes well with that 610. But you end up in a situation as well to where you have to start looking at the 200 week, 200 simple, 200 exponential. They're way down here, right? So even if it doesn't mean you have to skirt through this entire area, you're opening the door to a lot of possibilities that you might not want to experience, so to speak. So, and I'm talking about someone that's bullish or long-term bullish. A trader really should be really happy. I mean, this is ultimately something that's going to bring on a significant amount of volatility. And we're going to talk a little bit about how I would look at that and how I would play it myself. But the idea is let's keep an eye on these levels. And quickly I'll move to a monthly. We just closed the month. I mean, when you have a huge dump on the month like that, I don't look at the material as super relevant, right? So let me just take off a couple of this. I'll take that off for a second. Look, did it hold the 8 EMA? Yeah, it held the 8 EMA, I guess. But how bullish am I going to say that to be? I mean, I guess the good news is your intra-candle. I don't know. You still made a lower low on that level. So there's a lot of ways to look at it. Something like a 10-20 play. Basically, someone can look and say, hey, if you guys know from Twitter, obviously, that's something that I dropped a long time ago when you're looking at the 10-20 type play. And I see it's obviously something that's become pretty popular. That was something that was like this guy right here. If you've never seen it, it's pinned to Twitter, and anyone can take a look at it. It's just basically a way to give yourself a simple strategy to begin to build like a game plan around of how to trade, and then ultimately build on from there. It's not something you use in a simplified version, but my point is that I don't really utilize 10-20 specifically on something like a monthly scale, because I don't know that many people that are saying, hey, my next trade is going to be 19 months out, exciting, So basically I might use something more like a 5-10. In that situation, you were really looking at the trade was here, right? So that trade came up here, but the 5-10 or 10-20 becomes interesting because we'll see if it holds, right? So this is a 10 simple, this green. So maybe you come down there and that's a level where it bounces. Well, something to keep an eye on more than anything else. I'm not making sweeping observations about a monthly scale for sure. I do know this isn't anything lovely, right? So you obviously put in a local high. Now what you could say is, hey, maybe we're going to put in a higher low. Yeah, maybe, but how long is that going to take to play out? Time will tell. So it's not giving me a lot of information. It's not the ugliest picture in the world on that scale, but it could turn pretty ugly pretty quickly, and I'm certainly well aware of that. Going back to a daily, just make sure I gave you guys everything. So I did. So I'm glad I pointed all that out, right? So now that we got all that out, let's make no mistake about it. What do we know? We know that the trend is down. Yes, lots of support in the area. Uh, Basically, what's occurring is we have set a little bit of a range, right? So you basically set a little range here. And great, here we go. We set a range. Really, it's almost like a double range, but either way, just don't have to get too cute with it. You're in this particular range, and you're in a situation to where now it's having some difficulty. But these are counter trend moves. That's the whole point of this. So the idea of the knowledge that we're gathering is that we know specifically that we are trending down for now. Does that mean that all our trades should be down? No. But what it means is that your short trades are going to be trending type plays, especially if you know how to enter a short properly. That's going to be very helpful. It's not something I'm going to teach anyone in 5 minutes, but the idea is that that's the side that's going to utilize your advantage of the trend itself, right? Because no matter how this thing moves, unless it really leaps, which can happen, I mean, you can certainly see another leap in this range to the top of this box if this thing wins this little battle that it's having right here. So if the 1 hour can kind of right the ship here and survive, if some of these lower time frames can survive a little bit, and it's getting a little dicey for them, right? But if they can survive this battle that's ongoing, then you can certainly see this level be claimed, and in my opinion, you'll likely test at least the top side of this. How that rejection comes in is to be determined at that point. Can you leap beyond that? Absolutely, you can. It's just not something that I'm going to say, hey, let's look for this play. I mean, that would be something to where you rode a lower time frame counter trend play into it and happen to fall into that kind of breakout. To anticipate that, I think is you're taking a pretty low percentage play in that situation. But yeah, if you break this range, you get an H4 candle that closes above the range. There's not a lot here. There's no reason for it to really stop out. Not to mention that, I mean, really you open the door in that environment to this really finally being something that was some sort of complex play or a head fake or a way to gather to do a deep hunt for everybody. Again, that's not something that I'm going too deep in right now and saying that it's a major possibility, but that's what that would imply, because the reality is with Bitcoin, you don't often see this in a lot of assets, but Bitcoin's very different. What I mean by that is this. When I say you don't see this, usually when an asset spends months on a level like this and loses it, you're building a ceiling, right? With Bitcoin, you just don't see that. It's natural tendency to think that. I say it often just because it just comes out of my mouth just so naturally. But in Bitcoin, you don't really get that. You end up actually in Bitcoin having so many people. Here's my theory, right? So many people love Bitcoin, want to hodl it, have this dream of 100,000, a million, etc., that you come back to an area and it doesn't really have a problem with that area very often, right? So what I mean by that, what I mean is you dumped out, right, going back to 2018 dump, and it will usually set a range, and you'll see this over and over through Bitcoin's history. It'll set the range down here, and that's the problem area. The range is usually where it has the problem, right? So you'll set, almost reset an area, essentially, have some issues. Once it gets past that particular zone, yeah, it had a little bit of a battle going here. I mean, this is this is a thing of beauty in SOS, but essentially what you end up doing is really all you're doing is burning shorts, right? Because anyone that there is to short this, they actually end up being the ones that fuel the entire move. So intriguing, yeah, that Bitcoin has that sort of action, and of course, basically last time we saw this come back, it did hold. So these are all relevant elements. I mean, this is a zone here again that lines up with everything that we just talked about with the 610 and the time weighted average price and everything else that we discussed that's in this zone. And then if you lose that, then we're talking about deep, dark, scary things that probably aren't fun to discuss, but probably would make you a lot of money if you know what you're doing. Outside of that, let's see. Focus that I'm trying to make here, focus that I'm trying to do at the moment. Again, I don't advise this unless you kind of know what you're doing, right? Usually I say don't go long and short, long and short. I actually want to have exposure at the moment because the trading is so good, right? I mean, the trading in here was like stealing, right? I mean, literally it was very simple type stuff. And when you get another type of trend like that, it'll be like that again. So a little battle going on between bulls and bears is a little bit of a safe zone here. This is a counter trend play for sure. I mean, did we bring that up earlier? Yeah, we brought this. This was a counter trend play on a lower time frame, right? Even on these, you saw these are counter trend signals. That's what you see when you see this capital letters here. So counter trend type stuff only, right? It's not trending. It's not a trending signal. You got a trend signal here on like a 30 minutes, but it's a very low time frame, right? And this is counter trend on the 30. So eventually, yeah, you start to break down in these levels. You're in a scary position. And it does allow me to bring up one element here, which is this. We talked about a breaking point. I'm going to clear everything. I'm trying to rush in case you're wondering why I'm talking so fast. I don't want this to be the longest stream in the world. But ultimately, back here, we always said, what, 10,200 was dump susceptible. This is pretty simple. Again, I'm not the biggest Fibonacci extension guy either, but one rule that I do like essentially is to look at something like the 0.23. And it's pretty simple. If you set a high to a low and you end up back in this particular range here of this 0.236, below that level, you're at risk, right? That's not the place to be. And you'll see usually you'll build off. You can try to go to another fib or some other area. You might go back to the 3.8, the 0.5, the 0.618. I'm not the hugest fan of Fibonacci in that I don't see the consistency of being able to utilize it consistently to target like the 0.618 or anything along those lines. It's there. I get it. People use it. They're very effective at it. So I'm not talking negatively about it. I just don't utilize it at my edge specifically too much, except for the fact that I'll look at something along these lines and yes, I mean, you are dump susceptible below that level. So the same logic applies at the moment, right? You just have to set your range. Now, some of this is subjective, just so you know. I mean, for me, I'll take this last fake out. I'm fine with that. And I'm going to go into this level and say, hey, we're near that point. Now I made this a subjective level, which is basically 8,300. Okay, I completely understand if you take it from the dump point, right? So maybe you're looking at it at 8,200. That makes sense. I can see some levels in there. So maybe we make it like a little range, something along those lines. Some people might look at the leg, the last fake out right there. That was a big head fake on that, a pure dump. This was really, in hindsight, that's your big sign and signal, like the powers to be were at play, right? When you call smart money is something you really see in hindsight. Well, in hindsight, that was the one, right? You let them run it up, absolutely dumped on them, got rid of things, maybe got short, did what you did, and then essentially it was leading to that. But the idea is that I'm setting the range like that because I'm going to look at the more recent head fake type scenario right there, and then maybe to the drop off. So a range between 8190 all the way up to 8300-ish, let's say, let's round it down to that, is dump susceptible, right? So I take this here and I say, look, price getting back below here, let's just utilize this low right there. All right, well, it's not something you certainly want to break, I would assume. So if we take this just to be safe, you're dump susceptible in these ranges, and certainly below that level, it could be problems. Why? Why can it be problems? Because now you're losing your lower time frames as well. And again, the long-term trend at the moment is absolutely down. There's no argument there, right? You can't make any type of argument against that. So essentially, the bigger move in that circumstance would be down. Not only that, you'd also put yourself in a position to where you're giving yourself room. You'll likely bleed, even if there's some mega support that's in this range. And this is an interesting range. I'm not going to touch too much on it today, but it's a very intriguing range that bounced really at the top of a range, barely dug back in again and gave a second bounce. So it's intriguing. But anytime you start peeling back into it, you're playing with fire again. So this is what the bulls. The idea of a counter trend is that you have to be quick, right? You can't hang out. So that would be the best opinion I could give on the matter, is that it doesn't mean you can't take longs. You should just have an idea of what you're doing. And if you then take a long, just understand that you don't want to allow that thing to just hang out, right? So it reaches a level, even now, right? This is a little bit worrisome, right? This made sense. Even if someone just said, basic stuff here and said, hey, I don't like this look right there. Okay, I could have respected that if they took it on this one, same type of thing. At least you're limiting some risk in these particular areas, because this is a little worrisome, right? So you don't want to hang out when you're counter trending. So yes, now it's starting to hold on a bit. It's a little shaky at the moment, right? So we'll see what happens here. But if it does collect this area, then yeah, I would expect it to leap up eventually and at least try to not there, way too far on that, right? I would expect it to try to leap up into this zone, and then we'll see how it handles this 86, 87, 87.50 type range. More than likely, it's tired, right? You look at something like the 8 hour, looks a little stretched, right? The 6 hour, you're starting to see a lot of things line up that they're looking a little stretched out at the moment. So they will need this thing to leap soon if it's going to make it. And then when you realize that no, it's not leaping, there's some weakness coming in, then that would be the time sort of to pounce and to make your move for a short if you hadn't already. Now, short people that went short, what I would advise in that situation, just be aware, that yeah, you can set a short. In my opinion, if you're doing that, you should set a stop pretty high, so that might shrink your position. You should be really judging your position size off of your stop. So you might have to put a stop way up in this level. Doesn't mean you're going to allow it to go that far, but you have to understand that if this is going to reach a little bit higher, it's likely to leap, right? And maybe that leaps up. So if you had to get out, ultimately you'll want to prepare for that risk. That doesn't mean that if it now starts to grind higher, you might not close your position. Absolutely, be smart and protect your money, but you still have to be prepared for the fact that this could leap pretty quickly because they tend to do so. You're in a situation here, so yeah, if it turns up, then that's a pretty good place to be ultimately if you're on that scale. And yes, you can make a case that this is so far handling it pretty well. Yes, there's a lot of weakness there on the last 3 candles, 4 candles even, a little bit of an indecision, but it's trying to make that last approach. So we'll see. We'll see how that plays out. For me personally, I'm going to wait till there's some clearer weakness. Obviously, if that comes in, then I'll be happy to take a sizable short, in my opinion. All right. Other than that, let's see where we're at. So again, longs or counter trends. That's all you need to know. No sweeping observations. Stay open-minded. Why stay open-minded? Because basically something like this counter trend long, if you weren't open-minded, then you wouldn't have had that. I mean, I did see this. I didn't play it specifically in that spot, but I was able to relate to most of you guys pretty quickly on the first candle, right? That okay, this looks like a counter trend long on the 4 hour, right? It ended up being something that took a little longer. Excuse me, maybe even a 6 hour, maybe even an 8 hour now looking back. But if you can make that observation early enough and then say, okay, well, there is room here. I can identify that there's some counter trend availability here, then so be it, because the shorts are going to wait ultimately to they want the bulls to wear themselves out, right? Put a lot of effort. I mean, this is a decent move, right? But we now see they're putting in more effort to gain less room. Again, this is an area where I could see it leaping, so we'll see how that goes. But it's taken a lot here, and it may take too much out of it. And we already talked about that, where you have that dump susceptible zone. So be careful. But yes, again, shorts for the last time is absolutely the trending play at the moment. So that's if you end up finding yourself a good area to enter that short, then you're putting yourself into a position where you say, hey, I'm with trend, and you'll notice that at that point, price will flow a little bit easier. Of course, be careful, identify some areas, take a little profit along the way. Sometimes what I'll do is I'll enter a position, and whatever the size of the position is, I might add 10 or 20% to that size just to basically start to cut off one to take care of fees. So maybe it goes, I'm $40-$50 into profit only, and I'll cut that extra 10-20% just because I know that, hey, no matter what ends up happening, if I get stopped, I handled the fees. That's one way you can handle it. But it doesn't hurt also that if you get a jolt down, you cut 20% of your position, maybe 25. Maybe if it peels back and you start liking, you could add that back at a better price, etc. It's a very normal way to trade. All right, so like I said, we'll stay open-minded. I'm trying to think that is there anything specific that I wanted to get into. I did talk. It is important to speak about this. Like, let's say you're in a long. For me, in my taste and my risk appetite, I certainly don't want to sit through any type of lower lows, right? So if you're utilizing like a H1 type scale, regardless of where you entered, and that's your trigger, if that's your trigger chart, the one you're taking your trade on, then am I going to let this thing set a lower high for sure, right? We don't know yet, but if that's a lower high and then a lower low and hang out and hope that it'll catch here or hold here, I'm not into that. No way, not against trend, right? You got to know when you're counter trending. So it's an important lesson for you guys. And maybe not, maybe you guys already know that obviously specifically, but it's an important lesson for some people for sure. Other than that, I just wanted to give everyone an update. I don't know if there's anything too specific, so I'm no need to really go into any deep questions. Again, we know what the areas are. We know what the trend is. We know where the counter trend plays will look like. We know that the bulls need to act fast when they're counter trending at this situation, and vice versa. When the trend is up, it's the same scenario, right? The bears have to act fast. So if we go way back in time when the bulls were bulls on parade, they're just dancing, doing everything they need to do. We know that the bears in these situations, right, they need to act fast to get some movement, and that it did it here, right? But then when you have trend again, this is not going to cut it, right? If the corrective action looks like this, you got no real impulse out of there, then you're going to have some trouble, meaning to the downside. So basically, corrective, corrective. Uh-oh, you're in trouble. You waited too long. Bulls are going to take back over. It's the same scenario. You'll see it over and over and over again. Consolidation on a lower time frame. Bulls are going to take back over. Well, once we know we're certainly bearish, it's the same type of scenario. You basically now have the opposite effect that, yeah, it's been a big flush out. Okay, very, very low time frame. There was some impulse action out of the range. They took too long. It flushed down again. Hey, a little bit of a catch zone here. Good job. It reversed out again on low time frame, but you can't fool around too long, or else again you'll get tired on these lower time frames and you'll flush out. That's all I have for you right now. Hopefully that helped you. Other than that, I'm gonna leave you with the music. We'll go from there.